I'm Charlotte McLeod with investingnews.com, and here today with me is Jim Thorne, Chief Market Strategist at Wellington-Altus. Thank you so much for being here. Great to have you.
Thanks for having me, Charlotte.
Really good to be speaking with you. I think it's going to be a fun interview. I think many of our audience members are probably going to be familiar with who you are, but just since it's our first time talking, I was wondering if you could start with a brief introduction to yourself and the work you're doing right now.
Sure. Grew up in Toronto, American parents, got my PhD in Canada, worked in my formative years, worked in the United States, worked for a bank that was owned by Warren Buffett, came back to Canada to help grow Wellington-Altus, have a PhD in economics and finance. But I've lived my life on what's called the buy side, which means I've actually been investing money for all of my life as opposed to the sell side, which is selling research. So I take a little bit different point of view. And for whatever reason, I have a weird POV that combines top down and bottom up that makes a lot of people interested in what I have to say.
Okay, I think it's really good to have that context, so thank you for that. And there's a lot of different directions that we can go in today, but I wanted to start a little bit broad. So you've said on Twitter or X that you see the world evolving into a more multipolar situation. So I'm hoping we could start with what you mean by that and how that may play into your investment strategy.
Sure. It really goes back to Bretton Woods in 1945. Where the United States came out of Bretton Woods as the global leader, unquestioned. And what the United States did was really it backstopped the global trading environment, and it also backstopped the global security environment with debt to GDP at 125%, deficits at 7%. The United States can no longer afford to support the world. It's more like an adult, a mom and dad going to their adult kids saying, we can no longer support you. So what's happening with the tariffs, what's happening with NATO and Europe is the fact that the United States standard of living is falling and they can no longer foot the bill of the global economy. So we go from a unipolar world, which is the United States only, to multipolars, where there's many different powers militarily and economically speaking.
Okay, I think that's a really good opening to the conversation. And I definitely do want to hone in on the US right now. So you mentioned the tariffs, and I think that's an important part of the conversation right now. We've got a lot of conversations going on about tariffs as we approach the implementation date for the next round. I'm wondering what your thoughts are on that. Are these tariffs that Trump wants to see implemented across the board, or are these more of a negotiation tactic in your opinion?
Well, if you take Alexander Hamilton, who developed a playbook called the Report on Manufacturers. It basically said you want to have tariffs high enough to protect your industries, but not too high so that you don't generate revenue. So Alexander Hamilton had always said we should have a little bit of a tariff so we can get money coming in. And that's how the Americans financed themselves after the revolution. And at the far end, you have a guy named McKinley who used 25 to 50% tariffs at the end of the 1800s to basically for negotiation purposes. Bassett, who was the Secretary of the Treasury, and Trump are a mishmash. So what I would say to you is that, look, Trump wants to cut a new deal. And he's a deal guy, and it's the art of the deal. And yet at the same point in time, they need revenue. They understand what's going on. Scott Bessent taught economic history at Yale, so he understands everything that I just went through. So it's really trying to get people to the table to negotiate a new trade deal. And I think what's interesting up here in Canada is the fact that how badly the tariff debate has been misinterpreted. And I would say that maybe that's because of political purposes, because at least in Ontario, Premier Doug Ford won a landslide just running against Donald Trump, even though his economy was in the trash bin. So let's look at the auto tariffs, for example, with Canada, right? So I think, let me be clear, and I blame the Trump administration for not being transparent. Really what they want is they want you to have they want to develop the industry for critical parts in the car. And I would suggest that's the engine, the transmission, the drivetrain, and the differential. If you put American-made engines, transmissions, differentials, and drivetrains in your car, you will have approximately 60% US content. And listening to what Doug Ford and the Secretary of Commerce Ludnick said, if you have over 50%, you will be able to come into Canada, US tariff-free. The top 5 cars that are cars and light trucks that are exported from Canada or Ontario, basically, to the United States all have the engines, the transmissions, the drivetrains, and the differentials, which means they would be allowed to get into the United States tariff-free. So why are we all freaked out about this? And yet you have cars that are in the United States that are assembled in the United States. Let's say Mercedes in North Carolina, but they use German drivetrains, German differentials, German transmissions, and German engines. Even though it's assembled in the United States, it will not be considered American. So I got this just by doing back of the envelope math and investigation. So when you think of it that way, why are we all freaked out about this? But the good point is, one of the things, Charlotte, when I came back from the States to Canada is Canada has to change. We need to structurally adjust. You're talking to me from Vancouver. I am talking to you from Toronto. Look, an economy based on real estate and real estate only is not good. Look, an economy that has been blessed with natural resources that does not want to exploit them is not good, irrespective of our views on climate. Okay, so let's just put that out there, because so look at our standard of living is falling, productivity is declining, global credit has left, private investment per worker is declining. We need to have structural change. And what Trump has done has forced the hand of us in Canada to realize that going along the path that we've had for the last 2 decades is totally unsustainable. So in that essence, it's really good, right? But, when you go back and you think about this, going back to when we started at Bretton Woods, all the way up to where it is, what this really, and people need to really start to think about this really questions the United States dollar and the United States treasury bonds, one as the medium of exchange, and 2 as a store of value. And when the Americans attacked the Russians, their treasury holdings, and they locked them out of the SWIFT wire payment system, that it put into consideration, if you and I were sitting in the Middle East, I'm just picking the Middle East, and you and I were, our job was to consult with the royal family and what they should do with their trillions of dollars, and we saw what the Americans did to the Russians, maybe we would say we would want to diversify away from the US dollar and US treasuries. Hence gold, right? Hence diversification away. Hence people are kicking tires on Bitcoin. It's the same narrative, right? But what we've got here in this multipolar world, this new world, is we need to define what the new monetary system is. We need to define what new trading systems are, and we need to define what new security systems are. And it's exactly where we should be. Nobody should be freaked out about it. And this isn't a complaint. But look, for those that understand that, there's wonderful, wonderful, wonderful opportunities that are staring us right here in our face right now.
Okay, there's a lot of different topics that I definitely want to come back to. I want to ask you though, before we move on, another question about the tariffs. So you mentioned this misunderstanding of tariffs that we see here in Canada. There's also a lot of talk about, are they inflationary for the US? And I know you've had some commentary about this. So curious to have you share your views on that as well.
Tariffs slow growth. 1. So that's why we've been talking about a growth scare. We'll have a balance sheet recession in Canada. We will have a slow growth period in the United States. What tariffs do is they change the relative prices in an economy. They don't change the general price level. And so, no, they're not inflationary. And Tiff Macklin knows that, and Jay Powell knows that, because that's third-year macro. Okay? So, but that doesn't mean you don't have all these people freaking out, right? And so what I see, you know, and the other one is, you know, like inflationary expectations. Charlotte, you as an economist, you should never use the University of Michigan survey as your inflationary expectations, because it's tainted by politics. Half of the survey is Republicans and half of the survey is Democrats. The Democrats in their survey think the world is coming to an end. The Republicans don't. The Democratic survey, the ones that are talking about massive inflation. When, if we use the gold standard, which is what we used before Powell came in with this kabuki communication strategy, it's called the five-year forwards. Okay? The five-year forwards break even. They're 2.11%, which is below 2.25. They've been well anchored. They've been well anchored through this whole process. Jay Powell could cut rates if he wanted to right now, and he's not. That's the question. He knows, given the 2018 issue with Trump, that inflation is not the problem. It's slowing growth. So the question is why he is not, or why the Fed isn't doing that. You can't blame, Tiff Macklin. Bank of Canada has been cutting aggressively, right? But there is no justification for Jay Powell to have the Fed funds rate at 4.33, which is 225 to 250, the halfway mark. That's the range. When the natural rate of the natural rate of interest, where the economy is not too hot, not too cold, is 275. So they should be at least at 275 or in that neighborhood, which is where the Bank of Canada is, and they're going to have to go lower. So we're in this period of time of slowing cyclical growth and reflation. Rates are going to start to come back down. Central banks are going to start to expand their balance sheet, and which is perfect for gold, Bitcoin, and what I call secular growth are those companies that can grow in an environment where the actual economy is slowing. So that would be AI, blockchain, anything that could do with the secular forces are so much stronger than the secular forces in this current environment.
Really interesting to get your thoughts on that, and just a little bit more on Powell and the Fed. So Powell knows what's going on here. He doesn't want to lower rates. Any sense of when that does start to happen?
I think you're going to start if I wouldn't be surprised if they start in May, but I wouldn't also be surprised if they start in June. They start with a 50 basis point cut. I think they understand, so everything I've given you, they know. They're all smart people. That's they all know this, right? Scott Bessent knows this. Howard Lutnick knows this. They all know this, right? They all know that the Fed funds, when the Fed cuts, it's going to take at least 2 years for it to get into the system. So if the Fed cuts in June, that means it's not getting into the system to June 27th. So they know that the economic growth has been caused by, fiscal spending like a drunken sailor. They know that. Okay. So if that's the case, then I think they just want to get through this other side, make sure they're going to be late. I've always had them cutting 4 to 5 times this year, starting to become consensus, but it's going to be late. And Charlotte, the risk is not so much this year, it's 26. But the history says that our path is set. History suggests the clear asset classes that you want to invest in. And as I say to our clients is, quell your emotion and ignore the noise and take advantage of other people that are basically their investment process is driven by emotion.
I think that's really good advice. And just to follow up on your point about 2026, so that's the time that we should maybe start to feel a bit concerned about. What are you seeing that concerns you there? You mentioned this year slower growth in the US. Are you looking at a recession? How are you thinking?
If a recession happens, it'll be in 26, first off. Two, if you follow the the presidential cycle, the midterm election year is always a tough year. Charlotte, every year you should plan an 8 to 10% drawdown, and that's normal, natural, and healthy. And since the 1920s, the average drawdown in a midterm election year, which is 2026, is somewhere between 15 to 20%. So the data says, and the probabilities say that, we're set for an above average drawdown in 2026. Everything's going to be fine. We're still in a secular bull market, but that's what history says. And so, look, the Fed's late. We know that government spending is being dramatically reduced. We know that the economic numbers right now are a little bit flawed because everybody was front end loading, trying to front run the tariffs, get the money, get purchase before the tariffs gets in. When things calm down, I would suggest to you that economic growth is going to be slowing more dramatically, and the labor market is going to be weaker than expected. And the Fed is going, in that environment, the Fed has to get below 275. So I would expect the Canadian interest rate, the Bank of Canada in this cycle. So we're thinking middle of 27, let's say, okay? Bank of Canada rate significantly below 2%. And the Fed funds rate around 2%. So slow growth, interest rates coming down, reflooding the system, and the Americans need to come up with a system that basically gets people to want to buy US dollars and US treasuries again.
Yeah, I think that goes into the other point I wanted to ask you about your outlook for the US dollar. So how does the US reignite that interest?
Well, there are two, it's nuanced, right? Words are powerful, right? And so what we're going to have is we're going to have a reimagination of the US dollar system where trade and that, and store of value is based on US dollars and US treasuries. And I would bet that through the stable coins and crypto and Bitcoin. So I would suggest over the next couple of years that you're going to see a new digital global monetary system that's going to be stable coin and Bitcoin centric, that's going to allow the US dollar and the US treasuries to be supported. I know you're too young to remember this, okay? But the Americans did the same thing in the 1970s when Nixon closed the gold window and the US dollar ceased to be backed by gold. They made a deal with the Middle East, or basically Saudi Arabia, to say you can trade oil in US dollars, but those dollars have to be recycled into US dollars and US treasuries. That is the type of system that we're having. Now, where gold falls in, maybe there's some gold in there, I don't know. But at the same point in time, we're moving to a digital system that I think is going to be backed by stable coins, which is just a blockchain representation of money, which is just you take $5,000 Canadian and you put it on the blockchain, it's in a stable coin, right? So think of that as like a money market fund, and they're going to legislate it like a money market fund, which means it's got to be backed by US dollars and US treasuries. So, everything is evolving the way it should. If you're a historian, you should not be surprised at all about what's going on. And what I try to do, Charlotte, is my job is, is to say, look, there's three groups of people in investing in our lives. There's a very, very, very small group of people that make things happen. Okay. And then there's a little bit bigger group of people that watch things happen. And then there is the consensus, most of society that continually say, what the heck just happened? Right? I'm trying to get us into the watching what happens and making things happen box, right? So you can at least observe and figure out what's going on. So it's a very, very exciting time. You must grasp the uncertainty and the insanity. When I joined the business, it was the 1990s. It was exactly like this. We're doing this thing on Zoom. People thought that the internet was a scam and it wouldn't change anything. If you just would have ignored them, you would have been fine.
Okay, I think that gives a really good idea of how you see the future playing out. And I want to talk a little bit more about, okay, so we want people to move from this larger category into the more active, smaller categories. So I think people hear all of these things and it sounds pretty complicated, although you're explaining it in a straightforward way, but they want to know, okay, what do I do now? What should I own? So maybe we talk a little bit more about that.
Okay, so the economy is slowing. Okay, so you want to own asset classes that aren't affected by a slowing economy, but benefit from lowering interest rates, a lack of confidence in leadership, and an increase in liquidity. And that's gold, silver, Bitcoin, okay, or crypto assets. And then that's over here, that is, for example, AI, where, they're going to be building out these, money is going to flow in because of technology firms understand that if they do not evolve, they die. Right? And so you've got this weird confluence of extreme levels of debt needing to be refinanced, questions about the US dollar and US treasuries, and the largest innovation bubble or innovation wave of our lifetime happening at the same time. How do you invest in it? And that's where I would say, look, and so what I do is I ignore if you accept my thesis, I look at the US dollar and what has the US dollar done since Trump has got in? It's declined. Everybody wants it to decline. What's interesting is, isn't it interesting that gold went up when US dollar declined? Okay, so that's good. We want the US dollar to decline. We want to define a new US dollar system. We're working on that. And we want interest rates to decline, and interest rates are declining. So what we're doing and what we've got to go through is that psychological epiphany that the Wall Street is dealing with right now, that their narrative is wrong. Right? If you looked at the data all the way through since 2022, it was the only reason the economy was growing was government spending. It wasn't the private sector, right? And so now the government is going to contract. Government spending as a percentage of GDP is going to go from 25% down to its long-term average of somewhere between 19 and 20%. That air pocket happens. And then it's like after World War I or World War II, where we have a growth scare. And then after the growth scare, we have the roaring 20s or the secular bull market in the 1950s that the world completely ignores. So very bullish. We need to get through this period of time. The real question is, Charlotte, is the rate upon which the market goes through its psychological processing of what is going on. And what are we hearing now? The recession word, like you asked me. Are we going to have a recession? I don't think we're going to have a recession. But, one of the things I would say to you is risk assets are not the economy. And so I think we've got to get through this silliness of tariffs and Mr. Trump. We have to go through the silliness of a federal election and our politicians not coming clean with us. I don't understand why. I mean, it was me, a one-man band, right? I just did it on the back of the envelope, right? Go get the data from the US government. Go get the data from the Honda CRV that's made in Alliston, Ontario, has all of its majors and components come from the Honda factory in Ohio. It will go into the United States tariff-free. Why doesn't Polyev or Carney say that? You shrugged your shoulders. I understand. Me too. I don't know why. Why doesn't the CBC say that or CTV say that? But what do? We get everybody freaked and are running around with their hair on fire.
Yeah, that is definitely how it feels right now. Everybody is kind of freaking out. So, okay, so going back to where we want to put our money, I want to ask you a little bit more about the different assets that you mentioned. So gold and silver, I had told you this is an area of strong interest for our audience. When we're talking about gold and silver, do you have a particular price outlook for the metals, and how are you approaching them when you are investing in them? Is that the physical metal? Is it stocks, other things like that? How do you see it?
I think by the end of the Trump term, so by 28, I think gold will be $5,000. And so as a macro guy, now this is a bias. It's a bias, okay? Mining is very difficult. Okay. And if you want to buy the miners, you realize there's a lot of leverage in the miners, but there's also a lot of execution risk. And if you just buy the physical commodity, you don't have any execution risk. But you might not have as much leverage to the upside when the crazy phase starts. And folks, we haven't seen the crazy phase yet. This isn't, you ain't seen nothing yet. So my personal opinion would be to buy physical gold, but if you wanted to buy and roll the dice and buy, some really high quality gold and silver names, go for it, but it's on a case-by-case basis and do your own research, right? And so that's what I would say to you.
What about on the silver side? So you had mentioned silver. Not everybody, when they say buy gold, also includes silver. So curious to get more thoughts on your outlook there.
It's a poor man's gold. It's got more industrial usages. If gold goes to where I think it's going to go, then people will go into silver. And then what will happen is the high quality gold stocks, the large caps will get maxed out. And then we'll go into mids and smalls. And Charlotte, you're from Vancouver. If there is a small cap gold fever like there was in the early 1990s, Vancouver's going to be humming. It's where it used to be the hotbed of junior mining in gold and silver. And so it's a speculative craze, right? And I think that's what's going to happen. And I just want to emphasize that's a normal phase in the evolutionary process. Right. And so, yeah, I think gold's going much higher. I think Bitcoin's going to go much higher. I think silver will as well. I think, those non-traditional store of values, those store of values will work. And then, like I said to you, you want to throw copper in there? Sure. Uranium. Okay. Right. Gold and oil and nat gas are going to go, but we've got to get through this drill baby drill phase with President Trump. So I like that area of the market. And then I also think, over here, you've got this massive bull market in technology that's not going to slow down.
Yeah, I'll ask you a little bit more now outside of the commodities, although really appreciate your thoughts there. So Bitcoin, I mentioned that our audience is very focused on precious metals and commodities. And I've heard you say elsewhere that people will buy Bitcoin at the price they deserve, which I thought was a pretty interesting way to phrase it. So what's your outlook for Bitcoin, and any thoughts for people who are still looking at this and thinking, I'm a little bit hesitant about this?
Okay. So let's talk about another dirty little secret about macro investing. Okay. One of the biggest DNA markings of a bull market is demographics. You, young lady, are about to enter family formation investing years. right? The millennials, of the younger generation, right? Okay, I'm Gen Xer, so I'm just after the boom, right? Okay, when the boom went in, the boomers got into family formations, prime family formations in the late 80s to 2000, right? They invested differently than their parents. They invested in actively managed funds, and they embraced the first phase of the internet. Okay. Your younger generation, you guys like ETFs and you guys like crypto, right? So we have this massive cohort, these new prospective clients coming into the investment industry, saving for their retirement, saving for their child's education, saving for their whatever. They invest completely differently. That points to a secular bull market into early next decade. Okay? And so that's one. Two, I look at gold and Bitcoin in the same light. Okay? But Bitcoin has perfect scarcity. Gold doesn't. There have, I think, been 3 or 4 major global finds in gold, right, this year. Now, yes, I know they got to go through the feasibility study, and it's going to take 3 or 4 years to 5 years to get it on. But the point is, supply is going to come back on, right? You don't have that problem with Bitcoin. So to me, it's the manifestation of the same trade or the same global macro view. It just comes down to what you feel more comfortable with. The stable way to do it, and it's kind of weird because it was never, but in this environment, the low volatility way to do it is gold. And then if you want a little bit more volatility, you buy Bitcoin. And if you want max volatility, you buy a company like MicroStrategy, right? So it really comes down to how you want to manifest the idea in your portfolio and how much volatility and risk you're willing to tolerate.
I think that's really helpful. So it's kind of all a part of the same thing, and you can figure out how you want to do that. Okay. So for the AI side, I want to check back with you on that as well. So you mentioned gold, silver, Bitcoin, and AI. And I think that's the aspect that I'm the least familiar with in terms of how somebody might want to approach that. I know we've got the big players. I don't know if that's the best way to do it. What are your thoughts?
Yeah, I'd keep it simple and buy the big players. You know what it is? You use Google, right? Right?
Yes.
Right now, these chatbots are just very, very enhanced search engines, and it's great, right? I mean, I came up when I went to university, we had microfiche. We had very primitive computers in the libraries where you had to ask the exact question, right? So I look at AI as, this isn't doom and gloom, and it's not going to replace everybody. But for me, it's if you learn how to use them, you can become so much more efficient. And so that's the one thing. But what I would say to you is, look, I have an old Dell computer right here that I'm talking to you. No, an old Apple here. I got an older Dell over here. That computer architecture was invented in 1947 by a guy named Johnny von Neumann at Penn State one summer. Not Penn State, sorry, University of Pennsylvania, sorry, in Philadelphia. That architecture, which is what's called CPU-centric, is being completely replaced by a GPU-centric computing model, which means it's being able to process data in parallel at very high rates. Back in the 40s, there was no data to process. So you had a lot of functionality, but not a lot of data processing capabilities. So we have to go through, this is what NVIDIA does, and it's a solution. We have to rewire the whole global economy, right? You're going to hear people say it's overbuilt. There's a bubble. In the 90s, it was, there's dark wire. Ooh, we're not going to light up all the wire. Ooh. See, you get old enough like me and you survive, you hear the same concerns over and over again. So we're going to build it out. It will not be over until the return on invested capital turns negative. And we're not even close to that. So is sort of the euphoria honeymoon stage over? Yes. NVIDIA had a wonderful quarter in February, and the market went down. NVIDIA is cheap. NVIDIA's demand is not going down. It's actually going up. But this is the type of noise you get, right? And, so what happens is people get traded out of it, right? And a lot of people's investing ideas are manifested through ETFs, which means people are always all buying or all selling at the same time. And so you take advantage of it. So the conversation I'm having now is, look, you go back and you look at all the 10% corrections since 1980. If you pick the bottom, you're up 35% in 12 months. Buy. You want to buy when you don't want to buy. And then you go back to, let's talk about gold. The thing investors have to understand is, just because I'm bullish on gold, and I think by 28 you could see $5,000, gold needs to rest. Gold has had a parabolic run. Gold could rest here at 31 to 32 until August and still be in a massive bullish uptrend, right? So if you're a trader, you would be selling some here. If we were running the Charlotte and Jim's hedge fund, we would be selling gold and buying Bitcoin or MicroStrategy right now. And when they got overbought, we would sell some of that and we'd go back into gold. So I'm not saying you need to be tactical, but just recognize the fact that trees don't grow to the sky, and that there's going to be periods of time where they go back and correct. Like Bitcoin just corrected right back to its upward sloping 40-week exponential moving average. It's a leader. So is MicroStrategy. We get through April 2. People realize the end of the world's not here. And they go, oh, what do I buy? And then we flip from fear to greed like you wouldn't believe. And there is an extreme level of fear. There's an argument, or the old saying is, buy when there's blood in the streets, and there's a lot of blood in the streets right now, Charlotte.
Okay, I think that also helps me get a good idea of how you see things. And I don't want to keep you too long, but I'll ask you before I let you go, if you have any final thoughts you would leave investors with, maybe on the note of Canada, since we are both here in Canada, and this has been a pretty US focused discussion so far. But Canada is in this time of transition, and I think it'll be interesting to see how it plays out.
If we embrace our God-given gifts, which are natural resources, we are going to be one of the wealthiest countries in the world. And the light looks extremely bright. In an AI world, Charlotte, in a world driven by AI, the country that has the cheapest energy wins. We should be an AI superpower. If we would develop our nat gas, well, you're like the Montney in BC, our oil, our hydroelectric power, we've got uranium. We have been given gifts. We as a society have to make a determination about whether or not we're going to exploit those gifts or not. And if we don't, our standard of living is going to continually decline. I'm positive. I think we're at the beginning of a new dawn. And it's going to be a great age, a great era for Canada. We've got a lot of wood to chop, but it looks very, very positive. It's just a few things fall into place.
Okay, well, I'll wrap it up there for us. I think it's nice to end on that positive note. I'm glad to hear your outlook for Canada is good. But thank you so much for coming on today to go over so many different topics. I really appreciate it.
Thanks a lot. Anytime.
of course. And once again, I'm Charlotte McLeod with investingnews.com, and this is Jim Thorne with Wellington-Altus.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.